Right, hey guys, welcome. I'm gonna start a new little series, just called the weekly recap. Essentially, I'm just gonna recap my biggest lessons learned this past week, some self notes for myself, and anything to keep in mind. Yeah. So here I have set out five main points for me to note for this week. We'll start with number five and then build up to number one. So, number five, we have range bias. A lesson that I learned is that let's say we have a market that is bound in a range, like so. Right? Say something like this, right? A very clear range, anyways, right? And let's say we have these two trend lines here done out. And let's say we're looking for trades, and then the range starts to look something like this. Now, while we had this range going on here previously, now it's turned into more so a range like this. The range essentially shortened itself, right? Let me just do this. This is what I would call the new active range, right? We had this big range going on here, but then we started getting a shrink of this range, and we started to see new support and new resistance, hence creating a new range like this. If we're trading in this, we're essentially looking at these two trend lines. We should no longer be focusing on these lines. So let's say, for example, let's say we are here and we're looking to take a short. Our take profit should be in this area, not this area. Considering now we're in this new active range, our new set of stop losses and TPs should be bound within this range. We should not be hoping or accounting for the trade to come out of this and adhere to this bigger range. Now, of course, we can easily break out of this range also. Let me extend these guys a bit out. Now, if in the future we see the range still holding on, or we see a breakout, this breakout we probably expect to hit off this range and bounce back up into this range. If we see a continuation, then we're trading a continuation trend. If we get a bounce back into the range, we probably would look to take profit once again at this resistance level. If we were to do a long entry, If we were to do a long entry here, we'd be looking to take profit somewhere in this region, as we are no longer accepting this range as the active one, but we are taking this new one as the actual active trading range. Now, of course, this can take shape in many forms. We might see something like this, right? Say we're in a range like this, like that, like this, but then slowly we start seeing a shrinking range, and now instead of this big one we have where is it? Sorry. We now have this new one, this new active range, and no longer are we trading using this bigger range, as it's no longer the active one, but we are now trading within this tighter, smaller, more active range, right? So very important to keep in mind what is the most active range at all times. If the range changes, we have to first off see it, draw out new trend lines, and go from there. Okay. Now our next point is range candle design. This is something that I learned on Monday. Actually, you know what? It's best if we use the actual chart, I think. Yeah, let's use this one. So let's look at the 2 minutes. Just go back here. There we go. Say we are here. Right. Let's say, yeah, let's say we're here. Right. So let's say in this range, it's more of a wedge, of course. Actually, that doesn't really work. I'm looking for a range market. Okay, there you go. That works. Yeah, that works. Okay. So let's say we have a very clear bound range like this, right? Let's mark it out. There you go. Now, this is from 6 p.m. to market close. Let's say you were trading this range. Where would you be looking to put in longs or shorts? Well, first off, every range, what I like to do when we have it is kind of split it into 3 sections. Now, I don't usually draw these 2 middle lines. I just draw this top one and this bottom one. But essentially, we have an upper third section, middle third section, and a bottom third section. This middle section, you should not be trading, right? You should be only trading this top section and this bottom section. And what I mean by that is, because we're range bound, you should be only putting in longs here and putting in shorts here in general. Now there's cases, of course, where there's a very clear breakout forming and you might do a long here, but in most range bound markets, you would be generally looking to take shorts in the upper region, in the upper third region, and doing longs in the bottom third of the region, right? Now the reason why I said range candle sign is because we already knew about this strategy of shorting from the top or longing from the bottom in a range market. But what we're now looking for, let's say we're in this market, right? Let's say we're on this candle right here, right? On this doji right here. At what point would you do a short? I would not do a short on this candle here. I want to see one bearish candle form and a close and a rollover of that bearish candle for me to confirm that we are indeed bouncing off this top 1/3 of the range, right? Actually, let me just make it a bit more accurate. Let me use the bodies instead. There you go. I want to make sure that we are now actually reversing from the top of this range like we did here, here, and here, and we're coming back down. So essentially I would wait, I'd be looking at this candle, but I wouldn't be trading just yet. This doji, I could potentially enter, but I want to wait for one more confirmed good bear close. Now we get this candle. This candle rolls over in the bottom section, in the bottom of this 2-minute candle, and rolls over very, very bearishly, excuse me. This is an area where I would do a short, and it's in the top 1/3 essentially of the range, which I like. And we have now a good bear close from the top. This would be a short entry for me. I will put in a short right here and hopefully aim for around a full ATR, which at this time I'm not sure what it is, but I think in this case, let's do, if we were to enter here, I'd be looking probably for maybe about 15, 16 points around there. Now, of course, could I hold on and hold the trade till we reach the very, very bottom? We could, but that's risky because you never know what happens once you kind of enter this middle area. As you can see, we bounced up here, then a bit of consolidation, and then we pushed up. We retraced back here, bounced off the 50% retracement and of this range, and we went up to the upside again. So it's like, imagine we took a short here. Actually, yeah, so let's say we took this short here. We have no guarantee of it going to the downside. Now, of course, it should. The chance, or the percentage chance of it coming back down to the bottom of this range is, I would say, probably about 60-70% because we are range bound, right? But of course, there's that 30%, that 40% where we get something like this, right? So if you're shorting here, essentially first look at the ATR, see what is the average true value of 1 2-minute candle, and then that be your rough estimate goal. So I think in this case, it's about 16 or so. So I'd be looking for probably about a trade somewhere like this. Again, aiming for about a full ATR. If I really wanted to, or if the market was telling me that indeed it's going to continue down, I could hold a partial. But I prefer to just take my trade and take it off when I can, instead of holding on to the trade longer and longer if the market isn't showing me anything else. So I probably aim here, probably take it out maybe 10, 12, 16 points depending on the ATR, and that will be the trade. And same goes for when you go long, right? Let's say we're at this bottom of this range and we want to go long, right? We have this bearish candle, we have a rollover, one bullish candle. I wait for the rollover of this candle first. We get a bullish rollover. Here, I would potentially do a long. Now, maybe a bit more accurate would be here, but we are entering this kind of middle 1/3 section, which I would not like to trade. I generally try to avoid longing or shorting from this middle section, as a lot of, I would say, choppiness and a lot of algorithm action happens here, and it's not really worth your time, or it's not really worth trading it as it gets much more risky. So I most likely do a long here on this rollover. Again, not aiming for the full range, but most likely a full ATR, which here I think is about 16 or 15, so around this much. Again, as a trader, you're not looking for the whole pie, you're looking for slices, right? If you have something like this, right, as a trader, this kind of chart, it's fairly unreasonable to say, oh, if only I did a short here and then took it out here, or if only I did a long here and then took it out here. That's never going to happen, or almost never going to happen. It's really impossible to get the exact bottoms and exact tops when it comes to trading. As a trader, you take slices, right? So let's say we're here, let's say we come down and we touch this neckline here and we close below the neckline. I would do an entry here, right? And then maybe do a take profit of about 16 or 15 points, yeah? Same here, let's say we get a close above this neckline right here. I do an entry right there, take profit somewhere around there, top of this order block or breaker block, right? And that's my trade, right? Even if it continues going to the upside, I'm not looking for a whole pie. As a trader, you're looking for slices, right? You're looking for guaranteed slices, right? I know if once we beat this high here, we're more than likely going to hunt for liquidity, which is resting right there. And that's the trade that I would take most likely. Same goes for this range bound, right? If we're trading this, of course, you could say, oh, I'll do a short here, then I'll buy back here, then I'll do a short here, exit here, do a short here, exit here. That's not gonna happen in range markets. Or I mean, it's much more riskier to try to aim for these kind of things, because in a range market, even though we are adhering to this resistance and support, you don't know the path that it's going to take, right? Because you could do a long here, let's say it just barely doesn't touch your take profit, which is the exact top here, and comes down and let's say hits a stop loss, or you take it out here from panic. That's why it's best, if you're trading a range market like this, is to take slices. Entry, take profit. Entry, take profit, right? It dequalifies your trade and makes it much riskier if you're looking for these exact tops, exact bottoms, exact top, exact bottoms. That's very hard, because most of the time that isn't going to happen, right? The chart most of the time is going to look something like this, right? Very, very, very random at times, choppy, right? But even if a market is like this, you still have this guy like this, you still have support, you still have resistance, and because you have these things here, you know the rough area of where it should stop, rough area of where it should bounce on, right? But because these are rough estimates of where it should bounce off as resistance or bounce off as support, it's risky to try get those exact bottoms and exact tops. It's much safer to take those slices, right? Take that slice. So once again, take a slice here to here, here to here, entry, take profit. Let's say entry, take profit, entry, take profit, right? It just guarantees you more successful trades if you just take slices and try not to aim for exact bottoms and exact tops, right? So in a range market, look for that first bearish candle if you're trying to long from the bottom and that roll over to get a confirmation that we're actually reversing, and wait for that first bearish candle close when you're shorting from the top, like here, right? So you wouldn't enter on this blue candle, but you would enter on this bearish candle because you've now gotten the confirmation that we're actually bouncing off this top and not gonna sweep to the upside or break through, right? We're now starting to go back into the range and we're most likely heading for this bottom here. But again, we don't know if it's gonna bounce off here, bounce off a tiny bit up and then come back down. We have no idea, right? So we take a slice of this action of it going down, not the whole thing, because it's pretty hard to try and catch the whole move down. Right, I think I've talked enough about that point. Let's move on. Next one is forgetting about limit orders. This is just a personal note of mine. I keep forgetting I have limit orders set out. I would put in a limit order, let's say like this. Oh, I can't. The market's closed, sorry. I'd say I have a limit order set out here, and I would just keep watching the chart and I would just essentially forget that I had this limit order here and I get filled by accident or something else, right? So I need to remember that moving onwards. What is this one? 14.8. Let me just check here my notes. Oh yeah, that's fine. Yeah, we talked about that. That's fine. Yeah, this price action lesson is just what I was going to say in this candle sign, where if you have this range, if you're range bound, you're waiting for that first candle of confirmation that we're reversing. So if we're here and we're looking for shorts in this area, when I'm in the market, right, I have this doji. This doji is a bit of a 50-50. It's not enough. It's not a good enough close from the bears for me to go short, but next candle, beautiful close out of the bears, and I would do a purchase do a short on the rollover, which is here. Right, that's that. And then number one, ATR 80 to 100%. What is ATR? ATR is the average true range. This just shows you the value of the past 21 candles, or however many you set. I've set 21. So we're viewing, let me just delete this. So right now we're viewing the average true range of the past 21 candles, right? So right now the market is closed, but based off Friday close hours, the ATR was about 7, right? So let's say we're trading somewhere here instead, where the ATR was 13.12, right? That means that if we're trading here, no matter what trade it is, we'd be hoping to look for a full ATR, which is 12.13, right? There's more of a chance of getting filled and taking profit if you have a certain number of points that you're trying to aim for in a trade. And if you know that the average value of each of these candles for the past 21 candles, or the past half an hour, the past 5 minutes, whatever time frame you trade in, if you know what the average length of those candles are, then it increases your chances of getting your take profit if your aim is the same amount of points that the average candle right now is making. So if it's making around 12, if the average candle here on the 2-minute time frame is making about, say, 12, 13 points, my goal would be 12, 13 points. So if I get an entry here to go short or long, I'll be looking for a full ATR. But there have been moments where it comes like one tick away or just a few ticks away from a full ATR, so a full length of the average candle, which is, let's say, 12 right here. There's nothing wrong with taking 80%, 80 to 100%, right? So 80 to 100%. If you're trading using ATR, you should be aiming to get an ATR of about 80 to 100%. Now, if it comes ticks away from your ATR, let's say it comes to 95, and you get a really bad rollover that looks like it's going to reverse, and you have reason to take it out, then take it out. If you're getting more than a half, ideally between 80 to 100% of a single ATR, then that's good enough to take out the trade if you're indeed being shown signs that the trade is reversing against you, right? So let's say we have an ATR average true range of about 12 points, meaning the average 2-minute candle right now is making a size of about 12 points or moving about 12 points. Our goal, if we're looking for ATR, is between 80% to 100% of 12 points. So I think about 8 to 12 points is what we're looking for to take, right? Of course, we're aiming for 100%, but if we get a really, really bad rollover, let me expand this guy. Yeah. If you get a really, really bad rollover, we would take it out, right? So let's say we're in this market. Let's say, where would I trade? I would potentially do a long on this rollover, right? So we came down here, we've made higher low, higher low. We've now pushed up here, and we rolled over just barely above these candles. I will be looking for an entry here to go long, most likely. The average ATR as of this time was about 12, 13, right? Let's say it was 13. So my entry will be here, right? 13 points would be about there, right? So, and that's it. That's essentially my trade that I'd be looking for, right? I will put in a long here, and I'll be looking to take 13 points or so, right? And look, if we took that 13 points, it would have probably gone up to about 15 or 16, and then we got a bearish rollover and it came back down. So it's best to take that slice, as I was saying earlier, and not the full thing, because it's very hard to get the exact bottom and exact top. That's why you take slices. And ATR is a very good indicator of how much of a slice you should take. Because this entire move right here was about, let me turn on my magnet actually, sorry. From the very bottom here to the very top was 42 points. 42 points. Now, you might look in retrospect and go, oh my goodness, if I only took this 42-point move, I would have had so many more gains. But realistically, we had no idea. Like, in this trade, you have no idea if it's actually going to come up here and take out this stop loss or continue to back down, right? But because we got this candle here and this very nice rollover, and we put, let's say, in an entry right above this rollover to make the chart go into our trade itself, and we got a confirmation that we are going higher, we put in a long, right? We're putting a long here, but again, we have no idea how far high up we're actually gonna go, right? So we take that full ATR. Because let's say if you were thinking, oh, it's gonna go past this and make higher highs. Well, look at this, it didn't. It came up here, just barely swept the very top, and then came back down. If you're hoping for a new higher high to be made, it would have been made, but much, much later on, almost an hour later. it would have been made, right? So it's best to take an ATR. Take the average true range, the average points per candle when in a trade. So once again, it was about 13 points. You would do an entry here, 13 points, take it about there or so, yeah. And that would have been a good trade right there if you listened to the ATR at the time, which is about 13.12. And that goes for everywhere you go. Try to get a full ATR, and if you see candles reversing or rollovers that are showing the chart going against you, but you're in that 80% to 100%, then take profit. Then take it out manually if you have to, because not only is the chart reversing against you, but also you now have taken 80% to 100% ATR, which you are happy to take, right? Now, of course, if the chart is showing you signs that it's going in the intended way that you had it, then of course, by all means, hold it till you reach 100%, right? But if it's showing you reversal signals that it's going to reverse, either through the closes or the rollovers, then take it out if it's between 80 to 100%. Or I would say maybe above 50%. That's the 80% to 100% is just me. But I would say maybe above 50% is best. So if you have 13 points that you're aiming for, aim for about 6 or 7, right? At least, right? Essentially. And don't get greedy. Just go for a full ATR and be happy with it. So that's it. That's all the points I wanted to make for myself. Those are the main key lessons I learned from this past week. I don't think there's anything else. There's some other stuff, but they're very, very minor things, not worth mentioning in my opinion on this video. Maybe a psychological note is to adhere to the proper and original stop losses and take profits, even if you're down money on the day. Like on Friday, 2 days ago, I was having a losing day, unfortunately, and my last trade on Friday, you can actually go back and watch it if you want. My last trade on Friday that I took, I had a very good stop loss set, a logical stop loss set on the chart. And what happened is, because I was already down money at that point, I didn't want to lose anymore, right? So when I saw the chart slightly reversing or slightly going against me, I moved up my stop loss to reduce my risk. And my stop loss got hit. But looking back now, if I didn't take out, or if I didn't move the stop loss, it wouldn't have hit my stop loss. But in fact, it would have hit me at take profit, right? So even after you lose, the point is to stick to your edge. If you lose 4, 5, 6, 7 trades, doesn't matter. Your 8th, 9th, 10th trade should be sticking to your rules and sticking to your edge no matter what, right? No matter what. Because if you start getting angry, frustrated, nervous, stressed, and you allow emotion to take over, and you depart from your edge, which you have, then yes, you will most likely lose. If you took those 7 trades and they were all losses, but you stuck to your edge, then in my book, you succeeded. Because even though they were all losses, you stuck to your edge, which you know you have, right? And even after you've lost 7, 8 trades, still stick to your trade. Stick to your edge, sorry. Stick to your strategy, even after 20 losses or 20 wins. Because you know your edge is consistent. You know your edge brings you consistent profits. And your edge, right, isn't 100% guarantee of a trade. No one in the world of trading has a strategy or an edge which guarantees them 100% consistent profits or 100% success rate on every trade. That's not going to happen. That's impossible. Most good traders have anywhere between 50 to, I would say, probably maybe 90% of success rates. You'll barely meet anyone, or if at all, who has 100%. Most traders have 55, 60, 65, some have 70, right? So that means that 30%, let's say if your win rate is 60%, that means that 40% of the time you will lose. No matter how many trades you take, 40% of the time using your edge, you will lose those trades, right? And that's okay, because you know in the 60% you will win and have profit, right? As long as it's above 50%, that's all that matters. And you can accept all the losses that you have as long as you stick to your edge. And that's what I have to remember, is that if I have an edge in my trading and I start losing, I have to remind myself that this is okay, because statistically I'm supposed to lose sometimes. I'm supposed to lose, let's say, 40% of the time. And that 40% might come in a chronological order of 5-6 trades in a row, or it might come 2 trades yesterday, 1 trade today, 1 trade in 2 days loss. It can be spread out, but in the long term, in the data of things, 40% of your trades will be lost, and that's the most important aspect. So just for me, I have to remember to stick to my edge even after a long losing day, which I had on Friday, right? On Friday I had a very red day, and that's okay, because all those trades I did on Friday, which were losses, except the last one, were sticking to my edge. And if I did the same day again that I did on Friday, I would do it the exact same way, because I know I stuck to my edge again, except the very last trade. And the very last trade, if I stuck to my edge and didn't change my stop loss like I did, I would have hit my take profit. But oh well. Listen, it happens. We're still learning. We're still, I don't want to say new to trading, but we're starting to get it along. We're starting to find our proper edge. And if we have found an edge, we have to stick to it, no matter how many losses or how many wins, right? But that's obviously discipline, and that's something that you as a trader have to work on. It's something that I have to work on, right? So that's it. That's all the points I wanted to make for this past week. Overall, a really good week, really good lessons learned, I think. And we'll see how next week goes anyways, yeah? So this little video was just for me, just a little recap, kind of teaching myself, essentially. But if you found value, that's awesome too, yeah? Again, no editing, just raw footage, just me talking and going through my lessons learned, essentially, for this past week. But that's it, yeah? I'll see you guys on Monday. And as always, may God bless you and keep you safe, yeah? Alright guys, see you.